And if we know that it's the house, the only time that the house ever loses is very rarely, but they'd still lose on occasions. But if the general idea that the house is there to function as a centre to always make money, otherwise there's no marketplace, right? If the house loses money, there's no market. If a casino loses money, the casino's not going to be in business for very long. If a bookmaker can't make any money because they keep offering ridiculous odds, they'll offer you 3-1 on one football team winning, 3-1 on another football team winning, and 3-1 on the draw. Well, they're always going to lose money, correct? So they're really bad bookmakers. They will deserve to go out of business, rightly so. You'll take £1 billion on every one of those bets, correct? So when we think about it, the house is designed not to lose because it helps to function, the proper functioning of a marketplace. So there is a reason why the market makers therefore always end up in profit, because they need to. Otherwise, there's no market for anybody. When we understand that, and if we understand that, and if we accept that, which would be difficult not to accept that copper sell, by the way, is doing okay. We've got a little winning play on that copper short. Anybody with me? I had to decide to join in with a nice order because I was waiting for buyers. None showed up. So unfortunately, that was it. None showed up. So I was able to get a little squeeze coming out of the top lines there. But we'll maybe get a better opportunity. Too many sellers in here, which suggests to me that it's probably going to run 71 upside into top edges. Anyway, okay, so getting back to the market makers model. So your key to success is understanding this model. Now, when market makers lose, what is their biggest losing phase? Well, we know that their biggest losing phase is a market that looks a little bit like this. Correct? That would be, if we understand the market maker's model, this could be their biggest loss. Yeah. But obviously it's the biggest loss, assuming that they have no positions. So obviously it's not their biggest loss if they've obviously done something in this area here. So in other words, this biggest loss turns into their biggest profit if they've managed to accumulate long inventory, correct? So this actually turns into their biggest profit because obviously they're just pulling away liquidity and then they're selling to the buyers at ridiculously inflated prices. Okay, so the next question I've got for you is, does the market maker want to try and accumulate the long or not before they move higher? Well, if they know the market's going to move higher, the answer must be yes, right? The answer must be 100% yes, if they know the market's going to move higher. It'd be very unusual for the market maker not to know about that, because the market maker gets those orders during these phases. The market maker sees who's buying and who's selling. The market maker's getting a sense of what the informed traders are doing. So it's incredibly important to the market maker model that they gain an edge here by analyzing the informed trade, right? So it's important to you for gaining an edge to analyze that informed trade as well. It's important for you to start figuring this thing out. Now, we can obviously look at that and say, yes, that's easier said than done. Absolutely, of course it is. But we have tools that allow us to do this. We've got tools that shows us value. We've got tools that show us what the market maker is actually doing. It's called the active auction, isn't it? Who's active on the auction? So if we've got bidders active, or in this case, obviously what we would see is that bidders are active, assuming that they are active, assuming they have a handle on this, then that's a really, really powerful news. Now, the good thing about this is, do we as a rule know when this is going to happen here? As a basic rule, do we have an idea when this is going to happen? As a rule, yes. We know this is going to happen, for example, at our basic RGL concepts, right? So as a rule, we know that these volatility surges, which could be massive loss leaders for market makers, could happen predominantly at RGL locations. So day highs, day lows, cash opens, cash close, these kind of areas where obviously the market maker needs to try and accumulate liquidity. So in other words, going into RGLs like this, would it be reasonable that to the left-hand side, the market maker's job is to try and figure out what's going to happen on this side of the line? And their entire success depends on their ability to have accomplished that outcome. Entire success is based on this. So this becomes incredibly important to us, doesn't it? This, as a storyline, now becomes incredibly important. I want to take you back a step, one step, just a little step. And I want you to, we understand, of course, that commodity open and all that kind of stuff. Take a look at this market. It doesn't actually matter what the market is. You tell me from the following chart what the active auction is. Is the active auction a buy auction or a sell auction? In other words, when I say active, who is the active participants, not the passive? Who are the real money active participants on this auction? Take a look at this chart and tell me what's going to happen next. Who are the active participants in this auction? Aaron straight in with there within a fraction of a second that the active participants are the buyers, right? The active participants, because these buyers don't have to buy at these higher prices, do they? These buyers could have bought down here at these lower prices with that amount of selling that's coming in, right? So the active participants are now buying this product. Well, if we look at the time of the day, and we can see that this is coming into the NYMEX, the energy, the commodity market open, right? It would be reasonable that this is the market makers sensing a commercial buy opportunity, right? The market makers are wanting to be long coming into the cash open because they want to sell that long inventory at higher prices into the cash open. Anybody know what market this is? It's copper prices, right? It's copper prices. So when we then look at what happens into the cash open, okay, so 1400 hours kicks off, and then the price goes, right? And then the price absolutely rockets to the upside. So in other words, that market maker accumulation into the cash open is exactly what we've just been discussing, isn't it? That idea that they had an idea about what to do, regardless of what you think they should be doing. That's not what we're asking here. We're asking what they actually did, not what you think they should be doing is a different question. This is what they actually did. They were active on the bid. And if they're active on the bid, they're buying from sellers at higher prices. Why would they want to do that? Because they want to be long into the open. They are desperate to be long into the open because they know, according to their business model, if they don't get long into that open, they will lose money. Well, would that have been true if that happened? In other words, if we started our market makers game here, would we have been losing a lot of money by the time the price hit the high price? Yeah, absolutely. They would have lost a lot of money, right? So we would have lost a lot of cash if we were playing the market makers game there if we had not accumulated a long position into the open. So when we see that as an outcome, we start recognizing, not against value or anything else, not against anything, just about the shape of this. I should have done a bigger screenshot because otherwise you're losing the idea of what the delta actually did. So when you see that as an outcome, this is almost a perfect example of this discussion on the left-hand side here, isn't it? That's the reality of the classroom that we're doing on the left-hand side here. The bidders are active in here. We can see it. We might not like it, we might not agree with it, but we can recognize it as a reality. As a reality. So when the bidders are active, it means, well, you've got one of two things, haven't you, Miguel? You've got active or you've got passive, okay? Passive means that there's no real interest in being long. They're passive, right? In other words, they're doing their normal bid offer spread business. They're not actively pursuing a position. And that happens most of the time. They're not actively pursuing a position because they have no view on whether they want to be long or whether they want to be short. So when we look at their active participation, as I said, we might not agree with it, Miguel. We may have a completely different opinion. But if we at least recognize what their active participation is doing, we can say, well, you know what? I'm sitting outside of this one for the time being until I figure this out. I haven't got a bloody clue what they're doing. And because you don't have a clue what they're doing, that's exactly your answer. You just say, well, I'm going to have to just wait this one out until I hit. And I was scrolling back through the questions, and I obviously missed a few at lunchtime there just after we went into the dead zone. But there was a question about benchmark. Is that a benchmark? And benchmarking involves ultimately all the elements added together, as many elements as you want. Remember, a benchmark is a personal thing, not a room thing. Benchmarking is something that evolves. It's not an end state. A benchmark is something that as you build your tool set, as you start to understand each line, your benchmark becomes more detailed to the point that that is now your benchmark. Jerome's benchmark might be a loose idea for his benchmark because he always goes with the flow of traffic, for example. Theo might have the same idea that if he goes with the flow, his benchmark can be a lot lower because they're going with the flow of traffic. Miguel might want to buy bottom edges, and therefore his benchmark might need to be a lot higher than Jerome's or Theo's. So everybody's benchmark is going to be different from everybody else's, depending upon how active they want to be and how many, what type of style of trading they want to do as well. So this is important. Are all your benchmarks fades? Are all your benchmarks momentum, or is there a mix of the two? So this is part of anybody's benchmark, I think, regardless. If you've got access to order flow tools, and I don't think you should be trading unless you've got access to order flow tools, if I'm being perfectly honest, because it's a massive part of all trading. Yes, it costs money, it always costs money, but you're in a business that you need to invest some money into these things to make it work for you. So when you've got order flow tools, knowing what the market maker's game is, because if you don't have order flow tools, you're relying purely on price action. And we know that that can be manipulated to achieve certain things. So when we understand that the market maker, the bidders are on the active auction, if we understand that the bidders are on the active auction, you can see that the outcome was exactly why they were on that active bid. It's as simple as that. You can see why. It's incredibly important, isn't it? This is why we try and get position. Now, sometimes we don't get position for a cash open. Sometimes we have no view of the bidders being active or otherwise. We've no view, and we stand aside. And if we've got no view and we stand aside, that's your answer right there, guys. The market maker has no view. They stand aside and they let the auction start. They let the auction begin, and they start thinking to yourself, what the hell happened? Has anybody got a view of the S&P cash open here? Anybody get a view of that last leg higher? Does that even remotely look realistic there? Does that look remotely realistic, anybody? Aaron? Is that not an active seller up here? Is that not an active seller? Well, that's an active seller, right? So from this phase here, the market maker's obviously been accumulating some real heavy short positions at that point, aren't they? It's the only point on any of the charts there that would have given you that read, correct? So then the price then jams into the highs, the active selling continues, and then the price just sells off. You see how easy it is when you follow the market makers? Is that starting to make sense just by following the active shooter on this trade? Who's on the table? Who's got the control of the dice? If we watch to see who's got control of the dice, who's the hot trader, who's on the hot streak, we can see the deals. Now, obviously, as we come into cash opens, we can start recognizing that there was still a very active bidder in here. So we draw a line. You can see the delta's way below where it was. So therefore, there is a hot buyer at the bottom edge here, right? So we know if we buy into that, there's a high probability that we'll make money. You see how easy it is, guys? I mean, seriously, how simple it can be if you just pay attention. You might say, but surely that means that there was a similar situation here when we started to see this price running up and it seems as if these guys have gone way over the top. Well, you were right. I mean, you made money on that sell, didn't you? You absolutely made money on that sell. Did they try and accumulate before the cash open? What do you think? Was there any accumulation before the cash open? Visible? Not. Looks as if there was a little bit of a long accumulation into the low price. That seems a little bit heavy. So it looks as if there was a bit of accumulation in there, but does everybody agree that this is just ridiculous? Yeah, anybody disagree? That seems as if they've gone back into the short sell for the cash open here? No? Yeah, anybody? So they're going back into the short sell, and did they make any money? 6 points. 6 points within the first 60 seconds, Stuart. 6 points. $300 a contract in the first 60 seconds of the cash open by recognizing the active seller from the market maker side. And if you recognize an active seller from the market maker side, you say, well, their first gut feel is that they want to sell because they think there's going to be sellers at bottom prices because that's going to put them into a big losing position. So they want to get a little bit of short and take the price down. And that's how the market maker doesn't lose any money during this phase. And we can argue that when the delta gets to about the 0 point, which is obviously about this price level here, you can recognize that the market maker is only just now coming to a 0 point. A 0 point. So the market maker is now going to start getting net short if it goes any lower. So when we kind of look at this, we look at each individual swing, we look at each individual piece. There seems to be a sell coming in at this phase that doesn't do very much. It kind of exhausts out and drops down eventually. We can look at it from the overall view of the marketplace, can't we? We can zoom in, we can zoom out, we can get a feeling for it, we can sense what's going on, we can go back as many hours as we like, we can go forward, we can zoom into one candle at a time if you want to. The point is, the information is available to look at. The point is that you can see pretty much everything as it's happening in real time on your charts. And if there's nothing available, you can see in here, for example, this looks very clear that the market maker is still getting very short, right? The market maker is still accumulating. The market maker is now paying for those bids. The market maker obviously expects the price to do that. There goes the price. Do you see it? Do you see how the market maker was right again? They're nearly always right. Market maker obviously thinks the price is going to go up here, so they were right. Agreed? You can go right around your charts almost without losing money on any of these types of trades, just by recognizing the underlying storyline of anything that happens on a big swing, on a small swing, on an individual candle swing. We can start recognizing this sell, for example, here just doesn't look right. You don't notice it on any one candle, but you recognize that the amount of delta that came in from that phase there compared to how far prices dropped is ridiculous, right? You see that? So you know that there's a bottom edge coming in. You look for the bottom edge. You wait for the bottom edge coming in. There it is. And you go into it as a buyer and you ride it. And if that blue line stays below the brown line, you keep riding it. And then the selling comes in again and you say, get me some more longs. Get me long, even more, thank you very much, if you don't mind. And she goes again. Now, at the top edge, it seems a little bit exhausted. We can see the tick delta diverges at the top edge, so bag and tag some monies, absolutely. You can see there's never happens anywhere else into the top edge except for this little retest, but the tick still looks okay at that stage. This just looks a little bit weak. Market maker, any trades here? Nothing, right? Nothing. There's no trades here. This is what we call fair value. So there's no edge. The market maker's doing what they're supposed to be doing. So if the market maker's doing what they're supposed to be doing, that's called fair value. There is no edge with it. All you do is trade the Nash equilibrium. If the market's selling, you try and stay short. If the market is buying, you try and stay long. It's just go with the Nash equilibrium. Wait until you see an active auction taking place. Wait until you see an active auction. It looks like this could have developed into an active buyer at the bottom edge. And the reason why was because that rally had almost no buying in it. So it looks as if the active auction might have been a buy side at the bottom edge. So I could have picked up an easy opportunity to try it. Still seems to be the case, doesn't it? Still seems to be the case. So at the moment, this has an upside bias, doesn't it? Does everybody agree with that? At the moment, this trade has an upside bias, yeah? And look at what just happened. Is that not incredible? We've just went from force to 7.5 when I mentioned it, Stuart. Right-hand edge while I mentioned it. So if it's that easy, why is everybody not just doing it instead of trying difficult stuff? Why don't you just do the simple stuff? If the easy auction is to the top side, it probably means the difficult auction is to the downside. And that's how we make these easy money reads. That was a right-hand edge read. You can look back at the recording when we said it's got an easier ride north. You should be buying this. The result was a trade that went from 4s to 8s for $200. If you're a 5-lot trader, that's $1,000 you've just done for your day right there. $1,000 you've just done for your day. Fair value is just fair value. There she goes. Look at that, guys. There she goes, look. It's crazy, isn't it? We called that trade at 4. It's just traded 11. 7 points. Fair value, 7 points. Unbelievable. But it's only unbelievable if you don't do it for yourself. It's only unbelievable because you look on in examples like that and say, how do you do that? How are you able to call a buy trade in the middle of nowhere and it always seems to work out? You can do it because you just read the active auction. That's it. You just read the active auction, and if it's clean and you've seen some other evidence of the same active auction, then you deal it. Why was I confident about this active auction here? Think about it. Why was I willing to make myself look silly by calling an active buy trade there when it drops off like a stone? Why was I willing to be looking silly? Because I'd already seen an active bidder here because there was very little buy deltas coming in at that stage, right? Look at the price level there. You see how the delta between those 2 points is massively lower? Does that not give you a clue about the buy side credentials on this move? The price is going higher with no buyers in it, right? Price is going higher with no buyers. So that means that when the price drops back down, I'm going to be looking for an active buyer opportunity. So when the price started to rally and I started to see some active sellers coming in here, but we're getting an active buy against them, does that not tell you that this price is almost definitely going to go higher now? So it's not just a chance. I'm not taking a chance on my reputation being laughed at by calling a live trade on the right-hand edge and saying it's got a lot more upside. It's because you've looked through all the other elements and made that call at the time that it was quite obvious that this was going to go higher. How much higher? Nobody knows. We don't know what the auction's going to do next. We just trade the auction that we see. We trade the auction that we recognize and we deal accordingly. Anytime we see an active trader coming in, we start acknowledging the active trader. There's an active seller starting to develop off the top edge. You can see that for yourself. There seems to be an active seller in here. So obviously we're watching the tick divergence. At the moment, it's not quite diverging as much as I would like. But you can see that there was definitely a lot of buying in here. I'm not seeing the reversal yet to get involved, but there's definitely a lot of buying. You can see a big spike in activity in here. And obviously that big spike in activity leading to the probability that we're going to start recognizing just there. And now you're getting a chance. Look at this sell trade now. You're starting to see the elements that start to go towards the building of a quick short sale against that narrative at the background. And you've remembered it's not about one candle. It never will be about one candle. It's about putting individual pieces of that candle together, isn't it? It's about trying to put the pieces of the jigsaw together in one place. It's not about one piece of the jigsaw puzzle. It's about all the pieces. And if it turns back up, you can see here that we got a little turn back up. You just let it go back through again. It doesn't mean that you're going to get the right trade at the top edge, but it means that you're now looking for the right trade at the top edge. I'm still watching this at the moment. I'm watching the book on a bid at the moment on the NASDAQ, and I'm looking at a possible flip reversal sell into this if the bid ever flips. There goes the market maker. There goes the market maker. And I'm going to try and just get a quick stop in at break even. And that's me. I've now got my short sell on NASDAQ into Ninja Trader as well. And we're ready to see if it gets any more sell side value coming in. Let's take a look at what I got on that as an equity sell. Let's see how it played out. So this is what I'm watching on the NASDAQ. I was watching the price starting to come up, and does everybody see the active sell kicking in? You see? Everybody see the active sell kicking in? We've got a very large delta and a spinner candle. So with a very large delta and a spinner candle, I was very mindful of the fact the book hadn't flipped at that stage. But during that candle that you can see, I was able to see a book flip at the same price. So I was able to take a quick short. I've scratched out that trade, by the way, for +1. It never made any money, but I never lost any money either. So I was able to get a quick short into that before the candle started to move. I was able to get a quick short into break evens. As it transpires, it's came back up and it's retested it. That's okay. You're not always going to first trade on and make the money on the first trade. You're going to have to work it, guys. You got to work it. And it might change. Don't marry this position. Always go back to the board and see whether the sellers came in and what they did. Always go back and say, well, it's actually starting to look a little bit like fair value just now. So you know what? I'm just going to leave this alone for a little bit of time now. Leave it alone and see if anything else bubbles away in the background. Lovely.